Good morning everyone and welcome to this week's EOA webinar. Firstly, I hope you all managed to enjoy your Easter bank holiday and you managed to take some time out for yourselves. It's a real pleasure to have you here again this morning. For those of you that are new to Zoom, can I just point out a few housekeeping rules and advice for how you might make the most of this experience. Down at the bottom of your screen, you'll see a Q&A tab. If you want to submit a question, then please use that tab and Annabelle and Hannah, who are helping drive the webinar this morning, to help if you're having any problems accessing the webinar. This webinar is being recorded and will be available to share both as a webinar and as a podcast. Been some really scary statistics about the number of businesses that might actually go under in the next 2 weeks if they can't get access to cash. Obviously, it's very reassuring that the government have put in place some schemes to help businesses, and the one that many of you will be familiar with is the Coronavirus Business Interruption Loan Scheme. The other scheme is the Corporate Finance Facility. And we heard again this week that whilst there's been an increase in availability of access to that scheme by 4 more banks being accredited, including Co-op Bank and Starling Bank, there is still a huge challenge in getting that money through the banking system into businesses. The latest statistic I read, and this is changing obviously on a daily basis, is that of 300,000 applications, only 6,000 businesses have actually been successful. So there's still a challenge in how do businesses get access to cash. And that's why I think this topic this morning and the conversation we're going to have is so important. How do you deal with the cash that you've already got in the business? And bizarrely, in the middle of this conversation that many of you will be having in your own businesses about how do we manage cash flow now, there are parts of the media starting to talk about recovery, which for some of us might feel a little bit premature when we're in the eye of the storm dealing with the challenges. However, I think it's a conversation that's really important for the EOA to be part of, and looking at what life will look like and what work and business will look like when we emerge from this pandemic is really important, because clearly we won't be returning to business as usual. There has to be a new normal. There has to be a new second generation, if not third generation, of capitalism. And we want employee ownership to figure centrally in that conversation, so that businesses that demonstrate where they share ownership and influence, where this leads to higher levels of innovation, productivity and resilience, the exact characteristics that the next generation of businesses are going to need, and indeed this generation of businesses are going to need as they fight for recovery. We want to make sure that employee ownership sits at the heart of that dialogue. And this is a cross-party issue. This isn't just for the government. And that's why last week we wrote to the new leader of the opposition. The week before we wrote to the Chancellor. And this narrative of ensuring that employee ownership sits at the heart of the conversation about what the new normal will look like will continue to be a central platform of our future public affairs strategy. I've spoken in previous webinars about a survey that we have had operating, which is aiming to capture your experiences of accessing cash. So if you haven't completed that, please do pop onto our website and take the time to do that, because we're using the insights from that survey to feed directly into government or through our close partner with the CBI. We're also really keen to hear your stories of success, if you have one, of accessing finance. And that might be through CBILS or the CFF, or it could be through the Job Retention Scheme, because the government right now is wanting to capture those stories. And we would really like to take your stories from an employee ownership community into the government. So if you have any of those stories, please do drop me an email, deb.oxley@employeeownership.co.uk. And lastly, if you want to learn from a business that has successfully applied for finance, if you go onto our website, we've got a case study on there. It's actually been provided by one of our partner organisations called Be the Business. It's an interesting application story there, and the people who've successfully obtained the finance have actually shared their application. So, having said all of that, I've been busy in cash flow management over the last week. We've been doing our own cash flow reforecast, which leads me very nicely into our two guests this morning. So I'm absolutely delighted. We've got two people with us who have got very hands-on experience of supporting businesses, both through cash flow challenges and cash flow crisis, and also in how do you engage employees in taking ownership and responsibility for cash flow management. So I'd like to firstly welcome Jess Coles, who is the Chief Executive of Emerson Nash, who's going to join us and share with us, welcome Jess, share with us some of his very practical insights and experience, after which we'll be joined by Aaron Velmers from 90 Days. So over to you, Jess.
Thank you very much, and good morning, everyone. My name is Jess Coles, and I'm the CEO of Emerson Nash, a consultancy specialising in business performance management. I just want to give a very quick summary of my background. I'm a chartered accountant and corporate treasurer. I've also had the CFO role in multiple companies, ranging from those with about 20 million in sales through to about 200 million. And I've had to deal with quite a few situations where cash has been a real challenge for those businesses. Once in 2008 in the downturn, I've managed a business through a CVA process. I've also managed a business that was about to fail and had to turn around. And also managed a business which had to ask an investor to invest money to ensure it survived. And just to give you a flavour of one of those companies mentioned, I took over the business when it had enough cash to pay suppliers for one day. The business had 12 million in debt and it couldn't borrow anymore. The bank was refusing to lend it anymore. And the HSBC risk score, which is a score they use to determine the riskiness of the businesses they lend to, was in the 80s, out of a maximum of 100. So it's a very high risk business as viewed by HSBC. And in terms of the progress, we, in 9 months, brought that score down to into the mid-20s. And in 24 months, we took the business from a 12 million net debt position to a 12 million net cash position. So that's a 24 million pound swing. And today I'd like to share some of my learnings with you. And we're going to talk to you about 4 broad strategies to preserve cash. Most of those are within your control. And they are: control the cash you have, get more cash in from normal trading, get more cash in from elsewhere, and reduce or control the cash you have going out. And within those broad categories, I'm going to talk about 18 key actions that you should be thinking about now, if you haven't already. And a lot of those actions may seem obvious to many of you, but I really want to point out and emphasize the importance of acting quickly and implementing the actions you take really well. The overall team, business and discipline makes a really big difference to the overall effectiveness of the actions you take over time. So firstly, let's talk about controlling the cash you have. So the first action is to run your cash flow forecasts now and keep running them each day or week, depending on how close you are to running out of cash. And if you run out of cash, it means your business fails. So the reason you invest time in creating a cash flow forecast is to create forward visibility so you can see what's likely to happen going forward and ahead of you. And this gives you time to overcome problems. And that's really, really important. So in terms of the cash flow, I would recommend that you have a cash flow that shows the inflows into the business and the outflows of the business, at least on a weekly basis. And if your cash is very tight, I would do it on a daily basis, because you can get quite big swings, up and down within those days and weeks. I would make sure you have that detailed picture for at least 3 months ahead of today, and then maybe less detailed for a further 3 to 9 months. And the reason you want to have a good picture for six months plus is it takes quite a lot of time to do things about certain drops in cash. So for instance, think how long it takes to get a bank loan. You can't get one in a few days or even weeks often. It's usually a month or more. So that's the most important action. If you do nothing else from today, please take that action up. So let's run your cash flow forecast and do that now. Action 2 is to control the purchases or the commitments to purchase that you might have in your business or that your employees might make. Now, the classic way of doing that is to have a purchase ordering system. So if you have one, make sure you use it and use it well. If you don't have one, that's okay. You can still do a lot with an Excel spreadsheet and issuing sequential numbers to suppliers. The most important thing, though, is that you can communicate with your suppliers regularly that if they send in an invoice without a valid PO, purchase order, you're not going to pay it. And of course, when they do, and if they do send in those invoices, return them and explain that you can't pay it until you've got a valid PO. And that will change the behaviours, both internally and externally. This is action 2. Action 3 is about reducing the ability of employees to spend money on the company's behalf. So as an example, you might look at credit cards and reduce the limits on those credit cards or even remove them. So you try to look at ways of reducing the ability of employees to spend money on your behalf without you knowing about it. As action 3. Action 4 is similar, is to reduce spending authority levels. So for instance, you might have said to your marketing manager, you can spend on campaigns up to £5,000. Well, you might want to reduce that down to say £1,000. Again, it's another way of reducing the ability of other people to spend money on your behalf or the business's behalf without you knowing about it beforehand. It's really important. So moving on to the second main category is to get more cash in from normal trading. And the fifth action is to focus on credit control. And this is where you're trying to get in as much money as possible, as quickly as possible, from the customers that owe you money. And it's really important to pick up the phone with this. You need to create relationships, positive relationships. People pay other people they like in preference to people they don't like. So you've got to be friendly, professional, but also very persistent. So keep a focus on credit control and don't let that up. Keep focusing on picking up the phone and creating relationships and getting the money in. This is action 5. Action 6 is to get your invoices right first time. And this is to reduce the ability of customers to delay paying you. If there's a mistake on the invoice, or if you haven't got the information that they need to enable them to pay the invoice quickly, then that's a reason why they can delay paying you or may not be able to pay you. So get your invoices right first time. Action 7 is to deal with queries really quickly. You know, queries are often used as a way of delaying payments. So you want to deal with them as quickly as possible. And of course, there are multiple genuine queries as well. But ultimately, you want to get paid as quickly as possible. So action 7, deal with any queries on your invoices really quickly. Action 8 is relating to stock for those businesses that have it. Stock is a big investment in cash. And you'd normally use your stock levels or equate your stock levels to the level of demand and level of sales you have. And if your sales have fallen a lot, you're likely to have a lot more stock than you need. The most important thing is to try any way that you can to sell the stock that you have and not buy any further stock if you can. This will release cash. It's a source of cash. And I appreciate that it's potentially very, very hard to do that at the moment with demand dropping. But look at any way you can do that to sell your stock above the cash cost of buying that stock or what you originally paid to get that stock into the business. So again, that's a very valuable source of funding if you can work out how to reduce your stock levels. Action 9 is to delay payments to suppliers. Now this is probably an obvious one for most. One I would suggest is to think about categorizing maybe your suppliers into very, very important suppliers, ones that are partners, important suppliers that are hard to replace or change, and maybe your commodity suppliers, the ones that you can change quite easily. And then you can then apply different ways of treating each of those based on their importance. With the least importance, you treat least well, if you like. So that's the key thing, to try and think about how you might treat different categories of your suppliers. And if you're low on cash, then delay payments to your suppliers, action 9. Action 10, which is very closely related to that action 9, is to communicate with your suppliers a lot and be fair. If you don't say anything at all to your suppliers, they'll get really worried about what's going on in your business and their ability to pay. They'll be on the phone a lot to you and taking up your time. So it's really, really important to speak to your suppliers, tell them what's going on, tell them how you're going to get money to them and when that might happen, roughly. So again, they're most focused on getting paid themselves. So communicate to them, tell them what's happening, and it'll make your life and their life easier. So speak to your suppliers, communicate a lot is action 10. The third key area we're going to talk about now is to get more cash in from elsewhere. There are 3 broad areas. Firstly, action 11, take up any government help that you can get hold of. So there's grants available, there's the Civil's coronavirus business interruption loan scheme. I'm assuming you're going to furlough any staff or have furloughed any staff that you're able to. And speak to HMRC about delaying VAT or rates if it's applicable, or access to time to pay for any other taxes. So take up any help that you're able to get through the government and do that as quickly as possible. Action 12 is to speak to your bank. This is where this cash flow tool that you've already prepared is so useful. Banks will want to know that you're on top of what's going to happen, that you've invested time and effort thinking about how you're going to manage your business. And your cash flow forecast should be a good output of all that planning. And the bank will be much happier to lend to businesses that are well managed and are clear about what they're doing and how they're doing it and what the impact that has on cash, than they will be to lend to businesses that don't have that in place. So speak to your bank, make sure you're prepared with your cash flow forecast, any other financial and operating information that you need, and also what you're doing, what steps you're taking to help and preserve the cash and the trading of your business. Just as a note, I think RBS in the weekend is accounting for about 70% of the Civil's funding so far. So it might be worth a call if you are struggling with your current bank. Action 13 is to speak to your current investors. If you've got external investors already invested in your business, they've got a really big vested interest to ensure that your business survives. So speak to them, think about a rights issue if you're a large business, or ask for cash calls on those investors. They might be willing to help. If that's not an avenue, you could look at new investors. This is probably going to be unappealing at this stage because the valuations are likely to be low and therefore the dilution of current investors will be heavy. However, if this is an option, it is worth exploring if you really need to get cash into your business. So that's action 13. The fourth key category we'll talk about, so the fourth strategy, is to reduce or control the cash you have going out. And this is a really broad subject with loads of different areas we could focus on, but today I'm going to focus on reducing your staffing costs, particularly because this is an area that everyone has and it's quite a large expense. I'm going to assume that you've already furloughed any staff that you're able to. And with the points that we talk about, the main aim is to try and reduce your costs, but also keep your staff available for when the recovery appears. So the first action 14 is to stop hiring people, have a hiring freeze, unless you really, really need a particular person for a particular role. So don't hire anybody extra. Action 15 is to reduce the salaries of the staff across the board. So you, for instance, could consult with them and ask, can you take a 25% salary cut for 3 months, 4 months, whatever the time frame may be. And this reduces your costs, but also allows the staff to be available to work. And also, when the upturn comes, you can then reinstate the previous salaries. Action 16 is a similar theme, is to reduce the working hours of your staff. So for instance, you could ask staff working 5 days a week to move down to 3 days a week. This is particularly useful for demand hits businesses which you have less to do currently, and you can reduce the number of hours that staff are working to the level of demand and save money at the same time. Action 17 is to offer sabbaticals or other forms of unpaid leave. Appreciate this may not be appealing to most, but there may be some that will be interested in this. For instance, parents that have kids that need to homeschool might be an option. So all of these you can use in combination. Of course, don't just use one, use as many as you need to. And if all of that doesn't work, or you're still at the point where you've run out of cash, or will do in the future, you can then think about action 18, which is making redundancies. And this is where you're permanently reducing the number of staff you have in your business. The one watch out I would say is that there can be quite a lot of upfront costs with making people redundant, particularly if they have long service histories. So just think about the benefits of the long-term or longer-term reduction in costs against the short-term cost of making those redundancies. So that's the list of 18 actions that I think you should be taking or thinking about if you haven't already. And again, just remember, if you do nothing else, run your cash flow forecast, because this gives you time to start planning of how you're going to overcome cash flow shortages in the future. So thanks very much. I'll hand back to Deb now.
Thanks, Jess. That was great. 18 really practical steps that any business can take, which I've certainly written down all those 18 steps and things that we can look at the EOA. We've got questions coming in already, and we've had a couple of questions pre-submitted, but I'm going to wait now until we've had our second speaker, who is Aaron Velmers. Aaron is the Chief Executive of 90 Days. 90 Days is an EOA member, and Aaron's now going to focus on a build really on where Jess has got us to, with some very practical steps. Aaron's focus this morning is going to be on how do you make sure that everybody in the business shares that responsibility. So good morning, Aaron, and over to you.
Good morning, Deb. Thank you. Good morning, everybody. Thank you very much for joining us today. So my name is Aaron Velmers, and I'm the CEO of 90 Days. We work with businesses all over the world to improve business performance and employee engagement by introducing what we call ownership thinking. And that is, how do you get everyone in your business to come to work every day thinking, feeling, and acting as if they own the business, whether you're an employee-owned business or not. And as you well know, business isn't just about the numbers. It's also about people. So over the next 6 minutes or so, I'd like to share with you 4 key strategies for engaging everyone in your business and helping them to tackle the anticipated cash flow challenges that you've got. So I'm going to be covering 4 specific things, talking a little bit about how do you give individuals responsibility and ownership, how do you get them to track and measure and forecast and report the numbers. I want you to think about cutting costs collaboratively, and I'm going to talk to you a little bit about a concept of what we call gamifying your business. So to the first one then. So giving everybody responsibility for to talk a little bit about the profit and loss statement and the balance sheet. Before I do that, actually, one of the things I'd like to do is just to reiterate what Jess has just actually talked about. If you haven't already done so, you must put together a cash flow forecast. It's essential. Right now, cash is your critical number. So that's really, really important for you to understand. It's likely to be your number one thing, okay, certainly for the next few weeks until you get things back under control. So once you've got a working cash flow forecast up and running, I strongly recommend that you should engage all of your employee owners and not just your management team in managing the cash in your business. And there are 4 things specifically that you should do. So first, as I said, is to take your profit and loss statement and your balance sheet and identify each of the items in those documents that must be managed from a cash perspective over the next few months. And then I want you to identify and give specific individuals responsibility and ownership of each line item. And then I want you to ask them to track, to measure, to forecast, and to report on that number every day or every week at least going forward. So that's the first thing. Second thing, I want you to think about how do you cut costs collaboratively. So what I mean here is that I want you to use a bottom-up rather than a top-down approach to the cost-cutting exercise. Most organizations go about cost-cutting, the senior management team to get together and work out what needs to happen. But actually, there's so much more to be gained by getting everybody involved in this exercise. So get as many of the team together, challenge them to consider and propose how costs in the business can quickly be eliminated or at least substantially reduced, whilst still supporting revenue generation activities. That's really, really important. The third thing that I'd like you to think about is actually, how do you gamify your business? And what I mean by gamify your business is actually, how do you turn these activities now that you need to focus on to drive, for example, the overdue accounts being paid, or expenses that you need to target, or revenue lines that you need to generate, or any of the 18 points that Jess talked about for that matter. How do you get everybody tracking that, drawing up miniature scoreboards that they can use to track their progress on, et cetera, and more importantly, use that to report progress and communicate to the rest of the team how we're doing on each of these items that we're actually targeting as part of this strategy to preserve cash in our business. So the fourth thing that I want you to talk about is to ask you to build a cash flow scoreboard. So I'm talking about, in some cases you'll be able to still do this physically. So you'll have can have a big scoreboard on the wall, or you might actually have to do it virtually and generate it in an electronic document and share it with everybody in your team. But it's really important that you help everyone in the business to understand and to monitor the cash position on your business on a day-to-day or week-to-week basis. And the more frequently everybody sees that information, the more likely it is that they'll make the correct decisions to protect the business. And that's really the key reason for doing it in this particular way. So make sure that actually everyone understands exactly how the business is going. So to summarize then again, I want you to focus on those four key areas, right? So make sure that everyone has an item in the profit and loss statement and the balance sheet that they have responsibility for, that they track, they measure, they forecast, and they report on a daily basis. Make sure that you get everybody, and certainly as many people as possible, involved in the conversation about how you are going to work together to drive to cut the costs in the business back, and then turn it into, create something fun out of this. Make sure that people are tracking little scoreboards, designing scoreboards, and you can do all sorts of interesting things about that. If you're interested, we can share some ideas that others have used. But make sure that you get everybody engaged in communicating how they're progressing on each one of those line items that they are responsible for. Okay, so what I'd like to do now is just move to a story that I'd like to share with you about a client of mine that has actually had exactly the same kind of issue. So I had a call on a Sunday evening from Dave, who was the founder of an IT business, and they were a client of mine, and we've been working together for some months. And he told me that he had been looking at the cash flow forecast over the weekend and had realized that they were going to run out of cash in about 2 months' time. And he was really concerned, as you might expect, and he asked me what we should do about it. And I suggested to him that he gets all of his 25 employees together first thing on the Monday morning and show everyone the cash flow forecast, explain to them that the company would run out of cash in the next couple of months, and ask for their help in turning this around. So of course he said to me, well, that's what I thought you might say, but I'm really concerned that if I do that, everyone's going to get really worried, and that some people might actually even leave. So he was obviously, rightfully concerned. Certainly I suggested that from my experience, he should trust the team, and actually that they would rather want to help rather than leave. So Monday morning, persuaded, he gets them all together. He put a spreadsheet of the company's cash flow forecast on the wall and explained to everyone what the numbers were saying. And he asked his team to consider what they could do individually and collectively to turn the situation around. And what happened next was extraordinary. One of the guys immediately said that if it was necessary to cut staff at all, he would volunteer to go, as he was independently wealthy, and whilst he loved working at the firm, he didn't need to work. So the salary, his salary potentially could be saved. Two of the team who had been working in a major client of theirs, pretty much full time, suggested that they might consider investigating whether they might be seconded to the client, at least on a temporary basis, let's say for 3 to 4 months. And it turns out that the client had been already making some inquiries about that possibility. So there was an opportunity there not only to take the salary expense out, but also to perhaps generate some cash on top of that. Two others said actually that they would chase all the outstanding invoices the firm was owed, and so they wanted to know who that was and would try and bring in cash that way. Others, again, volunteered to start calling clients who'd maybe received proposals recently and see if they could follow up and try and get those orders placed ahead. Others actually offered to call all their current and recent clients to see whether there were any projects that needed to be done. And of course, everybody looked at what expenditure could be stopped immediately or at least postponed for a few months at the very least. And of course, what happened is within a few weeks, their cash flow problem really disappeared. So the moral of the story for me is this: Your people are extraordinary. Trust them. Their commitment to the firm is extraordinary. Inform all of your staff about exactly how the business is doing. Share with all of them what the current challenges are. Ask all of them to help and trust that they will. Get them to work on and own as many of the 18 strategies that Jess outlined earlier that make sense for your business, and just see how extraordinary they can be. And by the way, you really do want everyone in your business staying awake at night worrying about the cash in your business and not just you. So to conclude, I'd strongly recommend that you make cash flow management everyone's problem, not just the people in the management team. This is a great opportunity for you to educate and involve everyone in the business and create what I call ownership thinking. Thank you, Deb.
Brilliant. Thanks, Aaron. That was really, again, a really insightful presentation with some great tips in there. So we've got about 15 minutes now to take some questions. We've already had a couple of questions come in, and we've had some questions over the last half an hour. So I'm going to start with some of the questions that we've just had from participants who are listening in now. So one of them is very pertinent to the CBILS application process. Aside from cash flow projection, what else will a bank be asking for to ensure a successful application? Jess, can I maybe go to you on that?
Yeah. From my experience, I would suggest in terms of financial data, cash flow, a profit and loss, and a balance sheet are probably the three key documents that a bank would like. More important, however, is what you're actually doing, the activities and the projects that you're going to embark on over the next months, weeks, years, whatever that time frame is, that will make a difference to business. So think about that. Talk about, you know, how many products you need to sell, or the nitty-gritty of your business with the bank, so they understand the actions you're taking as well as the financial output of those actions.
So that's all looking ahead, Jess. So that's looking at the
Absolutely.
forecast. Is it important, do you think, that the business also declares some of its history? So where it's come from and its client base and its successes in the past?
Yeah. The reason banks look at history is because they assume, probably rightly in most cases, that past history will be similar to future performance. So you will need to provide history of what's happened and why it's happened. If you do have dips or years where you've had losses, for instance, make sure you've got a really good reason why that's happened. That's really important when you're speaking to banks. If you've got a sensible reason, it's not through mismanagement. Maybe it's that particular year you had a big push on your marketing and it pushed the business into loss, but look, the next year had double the amount of revenue growth. Those are good stories to have.
So I guess almost businesses they're almost doing a pitch to the bank. They're trying to sell their story. Okay, thank you. Second question, I think, Aaron, I might ask you to think about this one. Questions come in. Transparency is key. Are there any tips on communicating financial information to colleagues who may lack knowledge on the complexities of this data?
This is a really big issue, and I think it really indicates the heart of the problem. One of the things that I noticed specifically with employee-owned businesses is that the inclination these days is to share much more information, and that's a really, really good thing. But what I'm not seeing is the education that needs to be paid. It needs to also happen to make sure that everybody understands what those numbers mean. So for me, the important bit is actually, guys, this is a great opportunity, by the way, right now, to make sure that you also teach everybody about what the information in your business actually means. I've heard many organizations say to me before, well, actually, our people really don't care. They're not interested in this stuff, particularly when it comes to the financials of the business. And actually, my experience, that's just nonsense. The reason why people may lose interest is simply because they don't understand. So actually, quite the contrary, when you educate people about why these numbers are important and what they mean, and actually what the numbers need to be doing, and how do we get those numbers moving in the directions we want, actually, that's the story that people get very interested in. So share the information, absolutely. You'll hear me say that again and again and again. Share as much information as you can, and probably more than you really think you should be. And trust that people will treat that information respectfully, but more importantly, make sure that they understand what it means.
And it's obviously that's really pertinent for now, and particularly if you think about the tips that the two of you have just been sharing. But I guess that's a lesson for life, isn't it, in terms of ensuring that there's strong financial education across the piece, particularly as businesses move into the recovery stage, when there'll still be a need to focus on on cash flow. I know, and Aaron and I have shared a stage to try and create, believe it or not, finances can be fun. A session with our members at one of our regional meetings, and I think the premise there, Aaron, and you and I had a conversation about this, is if people don't understand the terminology and they don't understand even what a profit and loss account is, how on earth can you expect them to act on that? So yeah, that was a really good question.
It's almost circular. People just say, well, actually, I knew they wouldn't be interested.
Yeah.
And of course, it's sort of self-fulfilling prophecy. People,
and of course, the irony is, in our home lives, every one of us has to be interested in the numbers there. We all have responsibility for household budgets, for mortgages, for loans, for credit cards, and the like. So if we're capable of doing that, we're quite capable of doing that in a work sense. I'm going to move on to another question, very practical one here. I know I've certainly got a view on this. I don't know if either of you have any view on this. Are banks requiring security for CBILS? So are the banks requiring security for the business interruption loan scheme?
So maybe I'll give a view on this. So again, this is a very personal choice if you want to provide security or not. I think most business owners would prefer not to, of course, because it's your house, potentially, or other assets outside the business, and you created that business in a legal structure sense to protect other assets. One thing I would say is that look at your cash flow forecast, and if you're really confident that you can trade your way out of the current problems, if there is ways that you can create demand, that obviously reduces the risk. If you're not sure about it, then I'll be very, very cautious about providing personal guarantees.
I think what we've seen in the press in the last few weeks is that some of the banks were asking for personal guarantees for business interruption loan scheme applications, which was against the spirit of the offer by government, and that's been reined back now. So my understanding is that banks shouldn't now be asking for personal guarantees under the business interruption loan scheme, which is for smaller businesses. And for larger businesses who are accessing loans through the corporate finance facility, they could be asked to provide personal guarantees, but only on the 20% of the loan that the government is not guaranteeing. So I think that's the latest information. The British Business Bank website, and the link to that is on our own COVID-19 webpage, is providing the most up-to-date information there on that particular aspect. There's another question here, which is opinion, but we're all in, it's as good to share opinion as it is fact. Somebody's asking here about furloughing, and obviously furlough gives you that 80% back up to £2,500 a month. And somebody's asking the question here that we've experienced people asking for furlough because they need to look after their children. But in terms of cash, is it far better for us maybe to half the normal hours, but still on full pay if they can return, still bringing the revenue? So basically, do we agree that furlough only makes sense in terms of cash if there's really no work to do rather than just less work? Is it better to keep people on and reduce, as one of your tips said, I think, Jess, reduce their salary for the reduced hours, because at least then they're here to do some work?
Yeah, I think this really depends on what the situation is in your particular business. So if there's no work to do, it absolutely makes sense to furlough people, certainly until the 1st of June, I think, which is the limit the government sets so far on it. It may extend it. If you have got work to do, then it doesn't make a lot of sense to furlough people because they're not allowed to work while they're being furloughed. It would be better to, from the business point of view, certainly, to reduce the hours that they might work and still have them working for some time. Alternatively, if you're able to move the tasks that need to be done between people, you could furlough some and keep some on at full time. So you need to work out what combination best suits your business. Yeah,
I think I've heard a few businesses rotating the furlough so that they're getting the benefit of the cash coming back into the business through the JRS, but equally they're able to manage the workload.
Yeah, that's awesome.
We had a question that was submitted earlier on, which is, what can businesses do if they fail to secure business interruption loan scheme support or other finance? I don't know if you've got any suggestions there, Jess, about other sources of finance that businesses might look to.
I think it's difficult. The ones I've mentioned, obviously banks, investors are another source, not necessarily an easy source, but another source. Suppliers and customers could be a source of funding. If you know, for instance, suppliers, you are their sales for the future, so they want you to succeed and be around. So think about how you might speak to them, and can you delay payments to them on a longer term basis. Speak to your customers as well, because they actually might want continuity of supply, and they might be able to help you out in terms of a short term loan, or to pay you quickly or quicker. So think about all the different people, all the different stakeholders in your business, and approach them.
Yeah.
And there's one other, Deb, that most people frequently don't think about, and that's the R&D tax credits.
Mm-hmm.
R&D tax credits, is a great scheme. It's been around for a long time. It's pretty mature. There are lots of organizations that can help with this, and of course you can do it yourself as well, because they will take a premium for helping you. But it's cash that comes really quickly back into your business. And if you've got any work that remotely resembles an investment in research and development, you may well be eligible. And like I say, the cash comes back in pretty quickly. So that may be helpful. Jess will probably be able to say more about that.
I was going to say one other thing. You need to have made profits and paid corporation tax to get money back. Obviously, you need to meet the criteria, etc., which are quite broad. So definitely look at it. It's a great tip.
I guess the one tip that I would add into that is something that's quite personal to where we're based here in the Humber region, which is the local enterprise partnership here is offering grants for example, there's a grant that we could have accessed had we needed it, to provide for provision of IT equipment so we can support people working remotely. So the local enterprise partnership in your area may indeed be offering something specific to your area. So maybe you should go and have a look at that too. Really sadly, we've run out of time, gentlemen. Thank you for that. Brilliant contributions, some great tips there. All of these tips will be available on the recording of this webinar. Probably I'll just sum up what I heard, because I've taken 6 things out of this. The first one is speed. Act quickly, start early. It can never be too early. I think the second thing that you both talked about is actually, whilst cash is king, it's information is king. So having information reduces panic and allows planning. Communication, so do that with honesty, with openness and with trust. And that's with your employees, your suppliers and the bank. And then I think what we also heard in terms of Aaron's contribution is detail matters. So giving the detail of that profit and loss account, the balance sheet, the cash flow forecast to individuals, giving them that responsibility and asking them to track against that detail is really important. So be quite forensic. Collaboration, which is sharing responsibility, motivate people, even gamify this, try and make it a fun exercise. And for those people in your team who are quite competitive, they will probably rise to that. And lastly, education. So financial education. Make sure people understand the numbers that you are asking them to focus on. So some great tips there. Thank you to both of you for your really insightful contributions. This is exactly what these webinars are meant to be, to bring some real practical ideas to you, our members, and to others who have joined us this morning. Can I just remind you before we leave that we have another webinar next week, as usual. We've had to move next week's webinar to a slightly different time. The webinar is going to be at 2 o'clock next week. Obviously the hub is still available, the EO hub, for any of you as our members who want to engage directly with communication with other members. The regular weekly EOA community newsletter will now be published every Monday, so make sure you read that, and you can get in touch with us directly as well. Next week's webinar is going to be about trustees and the role of the trustees, which of course is really important. Employee ownership, employee-owned businesses tend to have trustees. They have a new set of responsibilities during this crisis. So really important session next week. That's going to be at 2 o'clock next Thursday, not 11 o'clock. So we will be here. We're continuing to support you, listen to what you are telling us that your concerns are. Your concerns very much inform the content of these webinars moving forward. So please do keep telling us what you'd like to hear more of or less of. Fill that survey in if you've accessed finance. Tell us your stories where you've had success so we can share those with others. and hopefully we'll have another good week. We may hear later today that the lockdown is extended, so we'll be no doubt putting more seminars and more webinars on in the future that cover some of the topics that will be key to you over this extended period. So thank you again to Aaron and for Jess for those important contributions, and look forward to seeing you all again next week. Thank you very much. Goodbye.